Since the phased lockdown easing commenced last week, banks have yet to fully reopen their doors to customers, and that has led to overcrowding of some of the financial institutions as customers throng the banks for withdrawals and resolutions of failed transactions. And this development is a source of concern to the public, and the Presidential Task Force on COVID-19 is also worried that the chaotic scenes around the bank could contribute to the spike in the number of COVID-19 cases. Here joining us to discuss the bank's end of this concern is the president of the Chartered Institute of Bankers Nigeria, Mr. Bayo Olugbemi. Good morning and thank you for coming on Business Morning.
Thank you very much. Good morning, but let me make a quick correction. I'm not yet the president. I'm the president-elect.
Okay.
I'm taking over on Saturday 16th.
Oh, fantastic.
So
congratulations in advance, President-elect. So let's begin our conversation now. Apart from the lockdown easing guideline that asks banks to moderate operations in Lagos, why are banks not opening enough branches as it appears?
Thank you very much. We all knew that for close to 6 weeks or so, the whole economy was locked down. And of course, last Monday, there was what I would call a guided ease, and it will be very, very difficult for the banks to open at once. Just like most economic activities are yet to fully open. So the people that we are serving are not fully open, and there's no way the banks will also fully open. However, some branches were open. Of course, on Monday being the first day after the lockdown, you expect that there will be chaos. It was chaotic. But I think it has eased down. If you look at subsequent days after the first day, there has been a lot of ease. So more branches have been opened gradually. Of course, you also know that we need to be very careful with health and safety of our staff, and the banker workers, because they are not immune to virus attack. So we have to do it gradually, and that's what's actually happening.
And so what are some of the things that have been put in place to protect the staff, just like you mentioned, and of course the customers as they walk into the banking halls?
Just like the health protocol has been established by NDCD and the state government, issue of social distancing, issue of having water and soap to clean your hands, to wash your hands, issue of sanitizer and co, and so forth and so on. And most banks also ensure that only necessary staffs that are very, very necessary to that cannot do their work online or from home are allowed to resume, especially those that have contacts with customers. And of course, most banks also ensure that staffs that that have their own personal cars, or at best, buses are made available. Staff buses are made available to pick few, the ones that will be in the offices, so that there will be social distancing.
What about the use of electronic mode of transactions now? Are customers not taking advantage of this medium, or is it that it's not been so effective? Why is it that you still have people wanting to go into the banking hall despite this avenue? Unfortunately,
the Nigerian economy is a cash economy, so to say. But I may bold to say that in the past few years, not just now during COVID pandemic, that the past few years, a lot of our banks and banking institutions have actually migrated to digital channels, online banking, agency banking, ATM, POS, and all these are available. And so to say, the 5 weeks of full lockdown in Lagos, in Abuja, and Ogun State, I think those channels were maximally used. So the banks are ready. They have all the infrastructure that is needed to back digital banking. But because of the nature of Nigerians, especially the lower level people, some still believe that they have to transact cash instead of digital channels.
But what about the issues of failed transactions that happen online? That's another reason why customers probably want to go to the banking hall to resolve, because they can't also resolve some of those challenges online.
But they are minimal. I mean, for 5 weeks, I transact online, and so also many people are doing so. So I think, yes, issue of failed transaction, it's not just the bank's problem. It's a general problem in Nigeria today. Internet penetration and bandwidth is low, and that has contributed a lot to freight transaction. But then, if you weigh it in the balance, it is not high enough to make people to go to bank at all costs. I think issue of awareness should be increased. The banks should make the public more aware about all the facilities available, and also give a kind of assurance to patrons or to customers that their transactions will not fail. And as much as possible, of course, the bank are also trying to increase their bandwidth and the internet penetration.
Talking about awareness now, about an internet penetration, of course, how do you tell the market woman, for instance, to make use of an electronic channel? Is there any plan to educate these people that, hey, you don't always have to go to the bank to conduct your transactions. You can actually do it this way without having to go there?
I think the banks have done a lot in terms of publicity, in terms of awareness. A lot of press releases are made, both in the newspapers and radio, and even some of their publicity materials are interpreted in local languages to ensure that the woman, the market woman, is also aware. It may interest you that a lot of women, market women are aware of these channels, and many of them are even having POSs now in their shops and stores to collect money. But the issue, like I said earlier on, is because our economy is basically cash economy. A lot of transactions are still being done with cash, and therefore, if you collect cash, you have to take it to the bank to lodge.
So what's the state of deposits now in the banks with the partial reopening of the economy?
Okay. Of course, during the lockdown, no bank was taking cash deposit. But of course, digital deposits, online transfer was going on unabated. And of course, definitely because we are just resuming, the business are just picking up, trades are just picking up, sales are just picking up, there will definitely be decrease in the issue of cash deposit. But that of digital transfers, I think they are on the high.
Now, no doubt that COVID-19 has dealt a big blow to the economy, but let's talk about the payment of salaries now. Are the banks still able to pay salaries of their staff this period?
I'm not aware of any bank that is not paying. I mean, if you look at the bank's results for 2019, most of them did very well. And even if you look at the stock exchange index, the banking subsector have contributed a lot to the rise in the stock market deals. So, I mean, up to date, I've been in banking for a long time now, and I have a lot of friends. I've not heard about any report that any bank is not paying salary. So to say, every bank is paying their salary as at Wednesday.
And the CBN has actually asked the banks not to lay off workers. But do you actually see the banks keeping to those terms, especially looking at the challenges during this period?
Yeah, you see, it's not just that CBN gave instructions, so they say. We have what we call the Bankers Committee that includes the CBN, the NDIC, and bank CEOs. And I think it was a joint decision. And I believe all the banks, we abide by that term, the terms of that agreement. Yes, can it be sustained for a long time to come? I would say yes and no. Yes, if the economic spikes, goes up, and I believe things will get better. It may be slow but steady. And of course, each bank has the right to look at this, their own environment, their own business model, and to see what next. But I think what will happen eventually is there will be an upward swing in digital banking, and that doesn't mean staff will be reduced. It may mean staffs will be reorientated, retrained to fit for purpose. So at the end of the day, there may not even be any need for bank to reduce staff. They may actually increase staff. Of course, there won't be issue of branch networking or branch network increasing again, because the future of banking may not actually be in the banking now. But in the immediate term, in the short term, I see the banks upholding that decision to ensure that staffs are not relieved of their positions.
Well, how are banks actually coping with the low inflows at the moment? What are you learning about their survival instinct?
I think I answered that a little bit earlier on. Low inflow in terms of cash deposits. But the digital banking channels are still being used to do businesses. I know also that because businesses have been locked down, a lot of businesses that would normally bring money to the system, that would normally give take loan, may not. And even the ones that have taken loan, they may not be able to pay back as and when due. But I think what the banks will do at the end of the day is to really negotiate, especially tenor of the loans. Maybe a loan that is due to be paid back, paid down in 2 years. Maybe they now increase it to 3 or 4 years to make sure that as the businesses begin to get more returns, they will also begin to pay down their loans. So at the end of the day, I think banks, by nature of their business, are risk takers, and they will have done a lot of risk assessments, risk profiling before they go into some of these lending to different sectors of the economy. And I believe, by and large, as the economy improves, of course, the customers will also do their own bit to ensure that payments are made as and when.
Now, talking about lending to different sectors of the economy, like you mentioned just now, what are banks actually saying about oil and gas debts? Is there anything that is being done? Are they putting them into consideration, considering the fact that, I mean, this is not the best of times for that sector right now?
Yes, unfortunately, even before COVID-19, we have seen a lot of downward trend in price of oil and gas all over the world, and which, of course, will affect or is affecting Nigeria negatively, since the bulk of our foreign earning is from oil and gas. And of course, I think the price has taken a hit of almost 50% downward or more. So definitely exposure to the oil and gas industry by the bank, which is about 31% or so, will be badly affected. But what I believe will be done, like I mentioned earlier on, is renegotiation.
Now, lately, there have been CRR debits and NDIC debits across the banking sector. How are banks actually coping with these headwinds?
I think what I will like to do now is do a kind of advocacy to CBN that as much as possible, there should be a ease, there should be a relaxed, that CRR thing should be relaxed, the rate should be reduced. Because yes, if you ask me to lend and there's nowhere to lend to, or the risk is high, I want to be very, very careful. And if I'm also now penalized, it will be a kind of double whammy, double jeopardy for me. I'm unable to lend because of that of where to lend to or which industry to lend to. And now I'm debited for not lending. I think I will implore or advocate for CBN to relax the CRR for now, so that the banks will be better for it.
Mr. Bayo Olugbemi, President-elect, the Chartered Institute of Bankers of Nigeria, thanks for coming on the program.
Thank you for having me.